All right, welcome everyone to Apexpayman. Today I'm gonna keep it short, sweet. For you guys that don't know still yet how to draw a supply and demand zone, don't beat yourself up. It's okay. Trading by itself is very complicated. So I'm here to teach you guys the right way to do it. There's a there's actually a way. Two school of thought where I will share with you guys my own belief upon it. So first and foremost, I like to go on my daily candlestick. I like to use square box for you guys, especially. I'm gonna come up with a reason why. When you're beginning your journey, you want to have square box, and I will show you the reason why. So I like to put a red. Go with the color of your preferences. This is the first one that I see. It is quite significant. I will draw this one too. Okay, and again, perfectionism in trading is going to literally destroy you. So don't be a perfectionist. Don't be too meticulous. Yes, there's a finite amount of perfection on trading. You could perfect yourself, become better, but don't expect for you to be actually perfect because you're going to miss out on so many trades. You're going to let go of so many trades. You're going to do so many mistakes, and you don't want to be in the sympathetic nervous system. Okay, you don't want to beat yourself up. You want to stay in a very neutral state. And I don't want to diverge from the video. The subject today is supply and demand. So my too important zone is this one. We could draw one last that I believe could be a good one. Got it. Right there. Okay, that's it. Three zones. We leave it as it is. So the first school of thought is to have a square box, and the reason being is if you go in a lower time frame, you don't want to be misguided by a breakout, a false breakout. So let's just say I'm going to a 15-minute candlestick. All right, so imagine, okay, we had a line, and I'm going to come up. Well, the first school of thought is a square box. In that square box, you can see it's grabbing a lot of liquidity. So we are accumulating, 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 and accumulating. So if just say, for instance, you were in a minute or 3 minute and your zone was a bit lower, so all the way to where 24.76, you would assume that it's going up. And if you're a breakout trader, you probably would have gone something like this. Let's just say the take profit is here. Stop loss could have been right there. So you would have taken a 46 pip stop loss because you would have assumed that this is a critical supply and demand zone and this is a breakout, especially that is doing higher high, right? This is a very beautiful formation of pattern that is quite new, this V shape, by the way. Okay, and that is for another video. So that V shape is very confusing. I don't know if you guys saw the first one that I've uploaded about stop hunt. And these type of market, if you understand and you have a bit more experience than the average ones, and if you understand how and where do they do their stop hunts, and you could ride the wave, then this is the actual way to catch some pips. Fortunately, me, as of today, I did catch around 550 pips. I got out at 24.32.5 ish. Right there. Yeah, 24.32.5 right there. Did it manually, so probably the spread was like 0.7, 0.8 whatsoever. And the reason, once again, how I have got out in a perfect zone, it was once again supply and demand and also the storyline and many other confluences. But supply and demand was a major factor that helped me to get out. And I don't like to hold my trade 500 pips, 550 pips. The last time I've done that was 3 months ago. So you got to stay rational. You cannot just remain optimistic and being greedy. Stay neutral as possible. And I rationalized with myself. I was like, this is the place where I am going to get out. If I want to re-enter, I will re-enter later on. I did not re-enter. That's not true. Actually, I did re-enter, and it's going to be another video. So supply and demand zone, we're going to stick to that. So we're going to remove this. So this is the first school of thought. If you have your square box, it can be very helpful. Do I do the square box? Probably that's going to be the question. I don't do this because I don't like my charts to be clustered with a lot of supply and demand zones and a lot of lines, a lot of Fibonacci's, a lot of moving average. I don't like having a lot of indicators for the simple reason I prefer my charts to be as naked as possible. So even sometime I don't even draw my supply and demand zone because I see them instantly. I have the experience, the eyes, and I'm fluent with the actual market to understand where are the most important zones. So I don't necessarily need to put them um, for me to see them because I see them nakedly. That being said, so this is the first one. I will go now and do the other way around. So we're gonna go on a daily support resistance. So we're gonna remove this, and right there. The second school of thought is the line. I prefer the line. If I draw them, I will put the line. And again, if I draw them, I mean, I don't draw my daily, I don't draw my 4 hour because it's pretty quite obvious for me, but you guys should because like I said before, it is an important tools that you want to use it for yourself on your edge. So I'll draw my line and the way I'm going to draw my line. So before that for the box, I draw it from the close or the open of the candlestick. Okay, either for support resistance zone, you want to draw it. I'll do it again. Draw it from the close. I mean the close here till the end of the wick. Would you use all the wick? Go on with an average, okay? You don't need to be perfectionism. If you're still a beginner, which I assume because this is why you're watching a video of a support resistance tutorial, whatever you want to call it, you want to put it at the end of the week. So just to have all the zones and to make sure to not be misguided with breakouts and a false breakout. Okay, so that is the line. I like to put it here on the close of it. I will let the wick let go. So again, I will draw the three other ones that we had. Right there. And last but not least, right there. That's it. You would agree that this one looks a lot more cleaner, okay? And the reason being is because it's a simple line. You want to keep it as tight as possible for you to see the overall market and what is going on exactly. Now, the problem with that is the second school of thought is if you were a breakout trader and you don't have the experience, you could assume that this right there, once we broke the level of 24.72, you could assume that this is a breakout. So right there, especially that we have a full engulfing candlestick. So we have a bullish candlestick. Now, the problem with that is you would probably not trade. Well, hopefully for you, you wouldn't trade here. You would wait for a little retracement. So around here, and then you'd put your stop, I mean your take profit a bit higher, whatever level you were aiming at. Most likely traders, investors, hedge fund were all aiming at 25. If you've been in the industry long enough, you know what I'm talking about. So 25 is the level that everyone is aiming. And stop loss, you could have put it here. Now, because you are starting in the industry and you listen to my advice and you're acting like a professional a trader, which you have a bit more experience, you would draw your line and you would assume this is actually a breakout. Do not do this, okay? Do not do this. Draw the square box. Yes, it looks a bit more ugly. No problem. Buy yourself a second screen. One clean, one less clean. At least you can have a feel and understanding of what's going on exactly and not be misdirected on your direction of your trade. So I could have saved you a 37 pips just because you had draw the square box. And you know what's most interesting in trading is most of you guys have a 50-50 ratio, profitable and losses. Sometimes you don't just need to do more wins. You just need to learn how to do less losses, having a way for you to lose less and to find those nuances like a line, a square box, to change a little bit your edge where you can have potentially a better win rate. And so, in that specific trade, I mean, it's pretty obvious to me that this one right there were so much stop losses here. How do I know this? By the velocity of and the speed of this actual trend. And again, experience. So I'll put a red here. Many stop losses were like this. You had stop loss here, 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 here. I mean, all the way down, and it went so quickly because all the stop loss once again was all the way down. The liquidity was here. So this is where you could have saved yourself a good trade. Okay, we're gonna go to the other one here. That's the same concept. You don't have a square box, you have a line. Yes, it's precise, but then again, you could be misguided, misdirected by the trade, by false breakouts. If you're a breakout trader, you'd have a hard time. And the other one was right there. This one, you saved yourself. You could have a sniper entry. Good for you. But this one here, it could be a little bit more tricky. So right there, you could assume that's a break of the support, especially here. I mean, the candlestick closed below the support, and you could assume that it's a break. Once again, when it's a daily support resistance, expect it to be a zone, a range of price. How many pips we have here? Curious. 50 pips. Yeah, the zone could be about around 50 pips. All right, without further ado, I want to keep it short. I want to keep it clean. We could have done the 4-hour breakdown as well. If you guys are interested, just let me know down below with the comment. I want to keep it just on a daily for you guys to see it properly. And on the next upcoming video, if you guys have any suggestion, any questions, any recommendation, feel free to let me know. I will have a good time to just share with you guys a bit more of my wisdom, of my experience into the market. Been in the market at least 4 years, been in a loss for at least 2 years and a half. And the previous year and a half, I was profitable, consistent profitable. And I would say my beginning of the year is just incredible. So that being said, God bless, make a lot of pips. And don't forget, two school of thought. You have the square, you have the line. Be a square if you're starting in the industry, and be a line if you are a bit more elite. And if you have a lot of experience and you don't need those lines, well, the only line I would have put here, it would be right there. That's the only line I would have put. Why? Because it's a bit more tricky. It's in between candlestick. So if I'm in a lower time frame, I want to see it more properly. These one here, I don't need to put them. This one here, it's just noise into the market for me. I will go in a smaller time frame just to see it. I mean, those videos, I could do it forever. I just love sharing with you guys my experience and breaking down some charts. So I'm on a 4-hour time frame. We could see here support, I mean resistance, support, resistance here. So that is the only one I would have put, and that's an important price, which is the 24.10. That being said, God bless, make a lot of pips. See you guys soon. Take care. Ciao, ciao.